Hello, everyone. The JP Morgan collar level at 60.50 held perfectly as resistance on the SPX. In today's video, I'm going to talk about what the next steps are. I'm going to give you guys some levels that we can basically go long and short that I would be bullish or bearish at for these large tech stocks. So we're going to be taking a look at the overall market, some key indicators that I think will give us a much better understanding of bottoms or tops in markets as well. The SP500, the NASDAQ, the Russell, the large tech stocks, the VIX, the bonds, all that good stuff. All right, so without further ado, let's get started with the video. So first and foremost, this is a 1 minute time frame of the ES, the S&P 500. And during the beginning morning phase of the market, we noticed some chop. I ended up going long down here, and we ended up catching a move to the upside. But once we continued chopping, this was a very, very problematic situation for the overall market. What we ended up doing afterward was very, very nice. We ended up going short over here. This was almost a 100% gain. I sold the entire position down here, and the market ended up bouncing. We then went short again down here. This ended up being over 40-50%, and then last but not least, we ended up shorting over here as well. This was also a very, very good gain. So if you guys want access to all of the trades, my reasoning of why I'm entering and exiting everything live as I'm doing it, the link to join is down below. I hope to see you guys there. Let's get started with the rest of the video. All right, so you guys are all here after joining, right? Nice, thanks for joining. Anyway, first and foremost, the main thing that we really have to do is just look at the large tech stocks. Today was sort of a interesting day. We're at a major level of resistance on the overall market, meaning the S&P, the NASDAQ, etc. But these large tech stocks are also interesting. But there's always money to be made. So what I wanted to start doing is each day give you guys levels of where I would be bullish or bearish. So basically, I would be bullish above a certain level or bearish below a certain level. And currently on Tesla, I would really like to start being bullish on Tesla and this only applies if you don't have a position. Okay? So if you don't have a position, right? Of course, I'm not your financial advisor. This isn't financial advice. Above 465, above this 465 area, I think momentum can start pushing up. And then below this 436, 435 area, momentum can start pushing below, and then we could actually break these lows here. That's my opinion. Definitely also, if you guys are enjoying the video, please make sure to smash the subscribe and the like button. Drop a comment below on things that I could do differently or things that you would also like me to incorporate in the videos as well. But currently, this is what I think is going on with Tesla. Let's go ahead and take a look at Google. So Google, right? What we're seeing so far with a lot of these tech stocks is they had a strong rally, right? Obviously, so before I go into detail, whatever, all of these stocks had a strong rally. If you look at the daily chart on the S&P 500, strong rally. Where is the S&P currently? Where is the ES? We're at a level of resistance here. This is let me just clean this chart up. So this is clearly, we're at this was a rising wedge, right, on the daily chart of the ES. Rising wedge. We're coming back and retesting the rising wedge level. We're having trouble at it. Not only that, this is also, we're having trouble at the 6100 level on the ES as well. This is clear cut, two different spots of resistance. That's why heading into the morning, for the early morning scalps, while the market was very, very fluid, it was so easy to lean short, especially in the early first 10 minutes. After that, it was very easy to just lean short because the market was clearly showing weakness here due to what was going on with the daily chart, right? And that's another thing we have to do. Contextualize on the daily time frame what is going on the daily. Okay, so we're at levels of resistance on the daily. Therefore, on the smaller time frames, when you start to day trade, you look at the smaller time frames and you say, okay, bulls are getting tired on the larger time frame. In the grand scheme of things, bulls are getting a bit tired. they're probably going to get a bit tired intraday. So intraday, that weakness is going to permeate. That's exactly what ended up happening early morning. So we're clearly showing resistance here. The 60-50 level on the SPX, the 6100 level on the ES. This is just, just textbook sort of situation that we're seeing here on the market. And when we're looking at it on the NASDAQ, on the daily time frame as well, you can see that this 530 level has been acting as resistance for a long time, these past few trading sessions as well. So 530 on the QQQ, major level of resistance as well. And you can see that we wicked above it, but we did not yet close above it. So the SPY, the QQQ, showing resistance right immediately up top. And that was another thing I was showing a few days ago when we were trading down here on the ES. I was showing, hey guys, there's still room to go up to this trend line and this area of resistance. That's what ended up happening. And we ended up ripping in one day to that level of resistance, which was phenomenal. And it worked out really, really well. So now, right, the only thing that we can really do is zoom in on these large tech stocks. So I hope this makes sense why I wanted to just go straight into the tech stocks. But you have to, ease into it. So there is, okay, so that's the analysis on the S&P 500. I was looking at Google with you guys, right? So Google this is basically what is going on with the NASDAQ, all right? Google, basically this is 530 on the NASDAQ. Does that make sense? That's why I wanted to just shift in showing what was going on with the NASDAQ before continuing to talk about Google. And you're going to see this in generally a few of these stocks as well. So Google clearly wicked above a level of resistance. This is not an immediate time to start taking a long. This is not a good time, in my opinion, at all to take a new trade if you're not already in one. So I would much rather be bullish on Google above 199, above the 198.50, 199 area here. And if we start to break below 193, so just bear in mind, these bearish, anything that I'm showing with bearish levels, take these with a bit more grain of salt, in my opinion, only because we're in a very, very strong uptrend. And heading into seasonality, short signals might not work as well. Short opportunities also might not work as well. But this is where we would start showing some momentum to the downside. If we get closes below 193, then it's going to be really tough to just be it's going to be really tough to be bullish if we start closing below these levels. And I'm not saying, so these levels, just as a disclaimer, these levels are not a guarantee that we're going to get multiple days and weeks of downside. If we get a close, for example, if we get a close above 199 in a day or two, if we're up $1 or $2, that's a trade. I'm talking about this purely in terms of short-term trades. I'm not talking about this in terms of overall momentum. How are you supposed to know, if it breaks above this, what sort of arbitrary timeline or am I going to give with this? I can't, so I can't just say, okay, if it breaks above 199 for 14 days, it's going to remain above and make new highs. I can't do that. The best I could do is show levels of support and resistance based off of momentum, price action, and a break of those levels should give good trading opportunities. That's the best I could do. So I hope that makes sense. Google, 199, bullish above, bearish below 193. Nice and simple. Next, let's take a look at Tesla. I think we might have already looked at Tesla, but since we're here, above 464-ish, 465-ish area, bullish. Below 436, it's bearish. If you just look at how beautifully aligned these candles are, and just thinking about this in terms of a new trade, we are smack dab in the middle. There's no risk reward. There's no added benefit to going long or short over here. It doesn't really make much sense. So that's why when you're not in a position and you're looking at a stock, you have to be patient enough to wait for a good, solid opportunity. And currently, Tesla's not really giving that opportunity. We need to wait for above or below these levels. Meta. So Meta, I'm a bit more loose with Meta. So Meta, still clearly showing a bit of weakness here, right? But what I really, really want to see is if we can start to break above this whole zone here, right? I don't immediately want to go long as soon as we break above this zone. I would rather go long once we start taking a bite out of it. Does that make sense? Like, I would want us to really, really just like churn upwards above this zone. And that level would essentially be once we break above 614.50, 615 area. And if, we never get a bite, and if Meta starts to just break below 587, it coincides pretty well with this fib level here at 583. So below 587, this would be weak in my opinion. So there's that for Meta. Apple is clearly showing a lot of strength. This is we broke above 250. We haven't looked back. It held this 248 level almost perfectly, this fib level. You could see how perfect this fib extension level ended up working out. And that's why you look at these fib extension levels. We were looking at the recent highs from October 21st to the lows in November. And then we ended up seeing the 1.618% fib almost acting perfectly as support and resistance here. And then once we bounced off of it, we haven't looked back. I am currently not looking at any longs or shorts on Apple. It's very arbitrary. And clearly, just let it fly, honestly. If Apple continues flying, it's very, very difficult. It's very difficult to be bearish on the market if Apple, AVGO, Google, things like that are starting to fly. So Apple, clearly flying, let it fly. Amazon. So Amazon should be getting some love. Obviously, it did not end up making new highs with the holiday season, which is interesting. But, Amazon is also heavily influenced not only by the NASDAQ, it's also heavily influenced by the Russell as well. So with Amazon, similar concept to a bit of Meta, I want it to start seeing closes above the immediate level of resistance. So our immediate level of resistance is 229. Very clearly. Great, right? But how often do you go long above the immediate level of resistance only for it to start dropping lower and you start thinking, oh my God, wow, okay, I was wrong. I guess it's going to start dropping. And what do you end up doing? Go short. But the short is shallow and then very quickly just gets bought up, and then we end up ripping again. And you're like, damn, why did I miss this trade? I was already originally in it. Why did I end up doing that? So the reason why I'm adding these levels a bit higher is because I want I don't want to get caught with this entire little chop. I don't want to get caught chopping around in between these levels. So I want it to really clear the levels first for us to this would be a better opportunity. And yeah, that's currently it. I would want a long basically above this 230-50 area. And then it would start breaking down lower and start getting bearish, in my opinion, below 222. So that's that for Amazon. What I am also interestingly doing here on, actually, let's look at Microsoft first. Microsoft, same concept. I don't want to go long right above the immediate levels of resistance because we're still in bearish momentum. This is clearly still bearish momentum. This is a bear flag. And you could see that we probably haven't even crossed above the 382% fib. So this is a bear flag. I want it to break above more solid levels of resistance for us to comfortably be long. But then if it starts breaking below 431, it's pretty done, in my opinion. We should get a break lower, but again, bullish environment. Seasonality is bullish. But just look at the chart. I mean, like, where would you want to take a trade? You're in between two major levels. Does it make sense to take a trade here? Absolutely not. I'd rather wait. Be patient, right? Now, what I'm doing with chips is I'm not even bothering looking for a short. I'm not I'm not even gonna bother look for a bearish below scenario on NVIDIA or AMD. So this is just a matter of, where are we going to bounce off of for a continued move up. If things start looking bearish, I'll start leaving some bearish, levels, etc. But it's tough. Like, it's the same concept as Apple. What's the point of trying to short Apple? What's the point of really trying to short Tesla or these other stocks at the moment? It doesn't really make sense. But I digress. Anyway, with NVIDIA, clearly, similar concept to Google, similar concept to the NASDAQ. We're right at the immediate level of resistance. Had a bit of a pullback. Nice and simple. We're holding 137. We're holding the 382% fib from the original move here. It is what it is. It doesn't look bearish, it doesn't look bullish. But if you're a new bull, you can definitely even go long above 140, 50, 141 and have a tight stop loss above 139. And you could ride this whole move up, in my opinion. This is actually another long over here if you want to play that here. But, that's that for NVIDIA. Looks bullish overall. Doesn't look bearish. And AMD, same concept. It doesn't look immediately as strong, obviously, as NVIDIA. But if you're holding, if you got down below 120, you're solid. You don't even need to worry about anything. Once you get close to this 128, 129 level, this is resistance. So, once again, I want it to really, really solidly start closing above resistance. It might not necessarily be 129. It might even be the 130 level, which is the psychological level. But once you get here, this is where bulls are really going to have to start. Like, either we consolidate here and then rip to the upside. That might end up happening because they're going to want to try to get shorts on board. And they're going to want to try to paint a very bearish picture. Currently on AMD, this is a pretty bearish picture. We got a gap down. We got a red candle after a gap up. 2 red candles in a row. They're trying to paint a very bearish picture after a large move to the upside. This was an 8% move, right? Doesn't look great. So that's why I would assume that once we hit this level of resistance, it would be phenomenal. It would be phenomenal if they ended up consolidating a bit, showing a bit of weakness over here again, and then just ripping it above. So that's my thought process on these large tech stocks. Overall, they're not showing extreme bearishness, and with seasonality should force these stocks to continue being bullish. I would be shocked for us to really start breaking down lower. So a really, really fun indicator that I want to show you guys now is the 1-month implied correlation for SIBO between the SPX and the implied correlation. So the SPX is this red, which is the S&P 500, right? And the 1-month correlation is a really, really solid gauge of figuring out when markets are going to bottom, okay? So what we saw back in basically a few days ago, the SPX bottoms whenever this implied correlation is very overextended to the upside in terms of the Bollinger Band. So the Bollinger Band is very important because they show standard deviations above normal price action. So the upper and the lower bands are 2 standard deviations away. And when we get above these standard deviation levels, time and time again, look at what ends up happening with the SPX. This is the SPX, this red line, right? The correlation is trading above the standard deviation. SPX is at a bottom and it bounces. Standard deviation is trading, correlation is above the upper Bollinger Bands. What happens to the SPX? We're at a bottom here, and it bounced. Time and time again. Time and time again. Over here as well. Correlation. Ripping to the upside, right? SPX bottomed. And again, just to really drive it home, look at what ended up. Correlation is going crazy here. What are you doing over here? What are you doing over here, buddy? SPX bottomed out. So this is another thing that we're going to be taking a look at. Really, really good indication of where the market should be going. And yeah, if it hugs the lower Bollinger Bands, basically if it's just hugging the lower Bollinger Bands and it's continuing to drop in a steady way, then that's very bullish for the overall market in general. So yeah, we're gonna continue looking at that. Last but not least, let's just go ahead and take a look at the VIX. So the VIX alongside the ES at levels of resistance are really the two main sort of bearish things that I'm seeing at the market, right? So the SPX 60/50 level on the JP Morgan collar, right? Hit that level of resistance almost perfectly to the dot. We had a high of 60.4975. 60/50, right? Perfect level of resistance. And the VIX, why we're looking at the VIX is because the VIX has an inversely correlated relationship to the market. As the VIX gets closer to levels of support, as the VIX falls, right, the market bounces, right? Great. But if the VIX is hovering at a level of support, and if the VIX is hovering at a level of support, right? What happens when you're at a level of support? You end up bouncing. So if the VIX bounces, what happens to the overall market? It drops. So this is not a great sign that the VIX is sitting at this level of support here. We were also obviously green on the day on the VIX as well, but these are the only two real main things that I could see, aside from the weakness in AMD as well. But this is generally the gist of what is going on with the market. The large tech stocks are teetering about. The ES is trading at a level of resistance, multiple solid levels of resistance. The VIX is at a level of support. When we're looking at the IWM doesn't look terrible. It looks like, they're clearly buyers are stepping in. We're, again, once at a level of this 227 level is major resistance. We obviously saw a complete vomit on the IWM, but from a risk-reward standpoint, this does not look bad. And that is a problem for bears. What we want to see is if it can really cross above 227, 228, bulls are going to most likely step back in. And the risk reward, if you wanted to go long for, a reward to the upside, it's probably way better for longs in the IWM than trying to catch a move in one of the tech stocks, in my opinion. But this is really what we need to see. We need to see the IWM break above levels of resistance here. But this is, clear cut. This looks pretty decent. We also saw that the Russell was the best. It outperformed the ES, outperformed the S&P 500 and the NASDAQ today. So that was it's pretty good. That is also pretty good. Truly, honestly, that's really it. I mean, if we end up really breaking lower on the overall market, then the Bitcoin should end up breaking below 92. And hopefully it ends up doing that, and we could grab some on a move into the mid-80s. That'd be great. That would be great. Get some afros. But, did you guys understand that joke? All right, anyway. But, yeah, man, I think afros were in the 70s. I don't know, to be honest. But anyway, Bitcoin is going to, it's going to react and respond to what's going on with the overall market. And this is a weird spot for Bitcoin to really take a hit. Does that make sense? So Bitcoin is down almost 4%. It's pretty interesting how Bitcoin is moving in regards to the VIX. So it's, we're going to continue watching this. But overall, things are moving the way that they should. Seasonality-wise, the market should continue rising into the end of January. And let me go ahead and show you guys GameStop. Some interesting things on GameStop. So basically yesterday on Christmas, Roaring Kitty ended up tweeting a Christmas present. this ended up causing the stock to to gap up, and we're up 6%. Let me just show you guys on the daily here. So we ended up gapping up, and just look at how beautiful this chart actually looks on the daily chart. We are really just, we held this level of support, and now we're starting to break out. I'm not sure if we're just going to start breaking out here. I doubt it. I doubt it. I don't think that we're going to start just ripping to the upside. I would love to. I'm, you know, that'd be great. But I do think for the next few weeks, we should see some chop. We might see, you know, 30, 28, some just chop like this. I don't think it's going to just continue rising. But it's a good sign. Basically, every time this guy tweets, whenever there's some sort of reason, right, market ends up doing very well. The other interesting thing I want to show you guys is the RSI on the weekly chart. So currently the RSI on the weekly chart is above 70. Now, we've seen the RSI above 70 a few times in the past. We saw it for a week back in May, obviously, which is when it really ripped. Then we saw it again back in June, and it also ripped, right? But now here is one of the most important times where this occurred, and this was back in 2020. So, and basically, it's not just a clear cut, oh, we're above 70, it's very bullish. What I'm going to show you guys is what needs to end up happening for it to remain bullish. Okay, so we had, back in 2020, we had that move to the upside. Okay, the first initial move to break $1, and we, just this week itself, let me just zoom in here, right? So you guys can see this now. Okay, so we broke above $1.50, and it hit $2, right? Back in August. What ended up happening afterward is, yes, we did not remain above 70. You could see multiple times we did not remain above 70, but we did hold 60. So all throughout this time, right, we held 60. You could see the weekly RSI held 60, held 60. So even as the price was moving upwards, right, the RSI was taking a bit of a dump, etc., etc. You know, this whole move to the upside, while the RSI was very overcooked in October, it was not sustainable, right? Right, because at this point we were up almost 400% on the stock itself, right? So yes, then we had a big dump. The RSI, though, remained above 60. So as it continued remaining above 60, that's what gave room for the massive rip to the upside. And once again, you know, the RSI just, you know, held 60 this entire time and just ripped, right? But that's basically what I want to see ending up happening. If this move is real, right? If we end up getting a big move, which personally I think is going to end up happening between January to April. Sometime between January to April, we're going to have big spikes, big dumps. But especially what you really want to see heading into a large move is you want to see, just based off what we just saw, you want to see the RSI hold above 60. So we saw the first remnants of it. It hit 70. Good deal, right? Lots of buyers are stepping in. But you want to see it hold above 60. So on the pullbacks, are we going to just get, just looking at this chart, right? Does this make sense to get a big spike up? Not really. Next week? No, not really. It would make a lot more sense if it shows consistent strength. Some sort of consolidation, big spike, pullback, consistent strength, higher highs. Off of something like this, where we consolidated and we just get a V-shaped recovery, essentially, I don't think that's going to end up happening. I would love for that to happen, but it's good to be pragmatic. And that is my opinion currently. There's my thoughts for the overall market. If you've been here this long, make sure to subscribe. Make sure to drop a like, drop a comment on what I can do differently, what you enjoyed about the video. I hope you guys enjoyed. Please make sure to have an amazing Thursday night, and I will see you guys bright and early tomorrow morning. Take care. Have a good one.